Okay, good evening, good morning, good afternoon, depending on where you are. Welcome to OctaFX webinar. We're going to be doing a workshop for beginners this week. So that's today, tomorrow, and day after tomorrow, which is on Wednesday. And just a quick audio check. Good evening, good morning, good afternoon, depending on where you are. Welcome to OctaFX webinar. Okay. So checking on audio, if you guys can hear me fine and video is coming out okay, let me know in the comments below and we'll get started. I love the enthusiasm, everyone. It's like everyone's like here an hour before we start and everyone's gonna be wanting to know what Forex is, I guess. We're gonna be going super basic on Forex. So everything's good? Right on, let's go. All right, welcome back. This is OctaFX Beginner Workshop. This is basically for complete beginners, so people that wants to know what Forex is. We're not just going to be discussing about what Forex market is. We're going to be talking about a global market in terms of the currency market, as well as the equity market, the indices, the commodity market, and as well as the cryptocurrency market. This is part one, so this is going to be super basic and it's understanding the global market. My name is Vera Hinjoro and we're going to start this in just a few moments. Just get everyone ready and audio is alright for everyone. Okay, I don't see any complaints, so I'm going to start. Alright, so my name is Vera Hinjoro and I've been a full-time trader since 2004 and I've been a trader mentor. That means I'm a trader as well as mentoring other traders since 2007. Counting that would be about 14 years. All right, so I was also chief technical strategist for Forex CT, a broker in Australia, based in Australia. I was a technical analyst for the Asia Pacific region for Global Forex Trading, or GFT. Maybe those that are old enough to remember what GFT is, they are now Gain Capital. All right, I was also the chief technical strategist for Invest Financial Services, which is part of Invest Securities. They are one of the largest broker in Japan, and they're listed in the Nikkei Stock Exchange, actually the Tokyo Stock Exchange. And I have my own company, by the way. I run independent research and education company called Zenifix. Was a member of the Australian Technical Analysts Association, as well as the Professional Technical Analyst. And in terms of what I'm good at, I'm an expert in pretty much combining the Eastern methodologies and the Western trading methodologies into one. So that's mainly Ichimoku Kinko Hyo and the Fibonacci trading methods. Some of you that has followed my webinar in Bahasa Indonesia probably learned about all this. We just wrapped out Ichimoku last week. We're going to be doing that hopefully very soon in English for everyone. So I'm super excited to be doing this in English for everyone. Just a little bit of background on what I've done, what my experience is. I've written articles in pretty much Japanese. I've written articles for Times Magazine as well. You know, some of the financial websites out there. Been on TV, Channel News Asia. You guys in Singapore and Malaysia probably see me. Not quite recently, but yeah, in there. All right, and BBC UK as well as CNBC and CNBC Indonesia, CNBC Asia. Doing seminars for those in Singapore. If you guys, any Singaporeans here, been to Invest Carnival or, you know, Invest Fair, you guys has probably seen me back in 2016, 2015. I was pretty active back then. I was also a speaker for the Australian Technical Analysts Association Silver Anniversary with Daryl Guppy right there. Pretty much the only Asian guy right there in the picture. All right, so let's get over what my experience is and what I'm going to bring over to you. So in terms of experience, you can count on, in terms of my trading experience myself, that's close to 20 years itself. Tonight's agenda, we're going to be talking about the global markets and their surge in popularity. Right now, you guys have probably been hearing about what's trading. Some of you guys are new to this. Some of you guys probably heard of it. Yeah, so we're going to go really basics into trading. We want to understand what we're looking at. Okay, we don't want to hear what people are saying. People say buy this, buy that, but we don't even know what it is, so we don't want to invest without a clear understanding of what we're investing. Okay, some market terminology. We specifically want to understand how to trade Forex, and it's actually not something that's new to a lot of you guys. You guys all probably have done Forex at a certain stage, and then we're gonna wrap up with how to get started and how to open an account with OctaFX, and in terms of demo, practice account, or real account. All right. Okay. So we're gonna have a Q&A session at the end. So I'm gonna go through the questions. So if you guys have any questions right now, or while I'm presenting, you guys can type it in the chat there, and I'm gonna review it at the end of the session. All right. So we're gonna go. Ready? Here we go. All right. So global markets and their surge in popularity. Basically, COVID happened. We all got locked down. We got nothing else to do. A lot of people just jump on into, day trading. All right. So when people say they're day trading, there are different terms for it. We can call them scalpers, intraday traders, swing traders, whatever. Okay. But basically, day trading is what it's called, and it's completely different from what an investment is, or investing in, say, a stock market. Like if I buy an Apple stock 20 years ago and I just leave it there, I do nothing but hold the stocks, that means I'm an investor, right? As a trader, in terms of trading, it's different. We're going to be looking at price movement, price fluctuations in the market, any opportunity that shows up, we want to buy, we can sell, and it's a lot easier to do that through brokers. Pretty much you need to do that through brokers, otherwise you can't do it. Okay. All right. So when we talk about global markets, we are basically talking about Forex. Forex is the largest market, by the way. And then we have the global indices, which is the ASX 200 for Australia, US 30 for the States. That's the Dow Jones Industrial Average. Then we have the Nikkei 225 or the JP 225. And then we have the Hang Seng, which is the Hong Kong 40, DE 30, DAX 30, CAC 40, FTSE 100 in the UK. All right, and then we also talk about commodities, which is mainly gold, silver, crude oils. This is it's offered right now in terms of CFD contracts through OctaFX. Okay, and then when you talk about other markets as well, we talk about future contracts as well, including treasury bonds, index futures, and such other things. Okay, these products are typically traded over the counter. Okay, that means it doesn't go through the physical exchange. It goes through a broker, and then a broker has another broker, which is called a prime broker. So that's the back end thing. Okay, you guys don't need to know that. Okay, you are able to exchange trade some of this, like some of the futures contracts can be exchange traded. In terms of options like put options or call options, you can do that through the exchange as well if you want to. Okay, but that's not the whole point. The whole point tonight is we want to focus more on CFD. You probably have heard of CFD. It means contracts for differences, and that's basically what it is. We are trading instruments through CFDs. That's basically what OctaFX is offering. So when we talk about Forex trading, they call it spot trading and stuff like that. It's actually not really spot trading. We are actually trading Forex CFD. So we need to make it clear. Spot trading is a completely different thing. Forex CFD is a completely different thing. A physical currency exchange is a completely different thing as well. This is a live video, but I'm pretty sure some of you guys are probably going to see this not live, I guess. But when we're doing this, we're recording this live. Okay, so we talk about the pandemic. The pandemic starts, everyone has nothing else to do. A lot of people are wondering what to do with their money. Some of them are losing their full-time jobs, and people actually start looking into investing. You guys have probably heard about the GameStop story in the news, past 2-3 months. Actually, it's been about 6 months, but, people get into that, all right? They read Reddit sub forums and then start investing without understanding really what they're investing in. Some of them are stuck right now in their stocks, right? They can't actually get out from their stocks. So we want to talk about something that's actually more liquid. Okay, we want to talk about liquidity right now, and that's through brokers like OctaFX that offer CFDs to trade. Okay, all right. So why do people trade or day trade? Number one is flexibility of trading hours. and most instruments can be traded 24/5, right? Just now I said good morning, good evening, good afternoon. I don't know where you are, but right now my time zone, it's evening for me. All right, it's nighttime. So what are we gonna do? If it's nighttime, it's morning in America, right? If I'm trading American stocks, for example, I'll be up right now. I'll be looking at that market. If you are in America right now, well, good morning to you. Okay, but if you want to trade the Australian market, it'll be nighttime for you, and then you have to wake up at night to trade. But it's a matter of flexibility, right? Some people are not morning person. I'm more of a night owl myself. You know, I like to be up at night. I don't really get up early in the morning, so I have that flexibility. I have that option to be flexible in what I want to do, when I want to trade, and such. Okay. Number two, or one of the other main reason, is the ability to exploit opportunity from both the rising market and the falling market. Let me give you an example here. This is what I went through 2006 to 2009, right about there. Okay, so we have the subprime mortgage crisis starting out in 2006, didn't really blow up until 2007, and then we have the global financial crisis following that. That was pretty much about 12 years ago, and I went through that. Okay, so I started out, if you guys want to know my experience, I pretty much dabble in all the assets right now, but I started out in the Forex market first, which is technically the hardest one. Okay, because of the liquidity, the volatility, and the non-stop movement of the market. When you trade equity market or the share markets, you know that the share market has an open and a close. It's typically 9 a.m. in the morning, and then it closes at 4. And then after our trading leads to about 4:30. Some countries leads to about 5 p.m. All right, so that's different. Share trading is different. Share trading, you know, you're going to be looking at volumes, and when we talk about volumes, we're going to talk about the scale of the forex market soon, and then you are going to get a better understanding of what it is. Okay, so here's one main concrete difference. Look up the GameStop story, then you'll understand how hard it is to actually short sell a share market. Okay, the requirement for you to short sell a share market is basically to borrow something from other people that has the stock and try to sell it. It's super hard. Okay, in Forex through CFDs or CFD instruments through OctaFX, it's just click buy and sell, and you can get in and out easily. Okay, that's one of the big key reason why people are actually trading a lot of CFDs right now. All right, reason number 3 is lower capital requirement for most instruments. This is important to a lot of people that started out trading. Okay, when we talk about lower capital requirements, because we have leverage in CFD, which we are going to focus, and that's why I underline it, leverage with a caps, a bold, and an underline, because we're going to talk about that tonight. It helps you with getting into the market with a lower capital requirement. Okay, right. Point number 4 is better liquidity compared to equity or share markets. This means you can get in and out easier. In the share market, liquidity is like, let me put it simply, this is probably a best example. If you buy a stock and you want to sell your stock, if nobody wants your stock, that means liquidity is drying up. You're not going to be able to get out of your position. Okay, so it's going to drag on. That means your execution speed in terms of closing a position or opening a position, it's going to take longer. In CFD instrument, it has better liquidity. OctaFX has good liquidity. So when you click buy, it's more of a millisecond thing that happens. Okay, your order is pretty much triggered. Okay, you want to buy, you want to get in quickly. That's faster execution speed, and that's what liquidity is. We're going to be talking about liquidity more in session 2 and 3. So tomorrow and the day after, we're going to be focusing a lot more on that liquidity side when we look at the technical aspect and the fundamental aspect of trading. Okay. Next point is insider trading and market manipulation that happens in the share market. That happens a lot. Don't say that regulations is there. You know, the more advanced countries doesn't have that. Nah, you look up Enron. You can look up what's that bang? I forgot. It's on the top of my tip of my tongue. Anyway, The one that I remember most is Enron Energy. You guys can read up on that. It's basically cooking up the books. You know, it's market manipulation and stuff. Okay. Because of the scale of Forex, it's really hard to manipulate currencies. Super hard. Okay. Next is the rise of cryptocurrency. You know, back in 2011, when crypto Bitcoin starts popping up, you know, as a traditional trader, analyst, market participant, we look at crypto and we go, oh, okay, what's crypto? It's not really based on anything, and we don't buy much into that. And some of us are kind of regretting it right now. But cryptocurrency is on the rise, and you guys probably have that question right now. Is cryptocurrency part of the currency market? It's technically not. It's completely a different market, but we're going to talk into that a bit later on as well. Okay, so, but let me tell you one thing about crypto. It's hard to get into. Setting up a crypto account is hard. Setting up a crypto wallet, if you don't have the technical know-how, if you're not an IT person, it's kind of hard. If you are an IT guy, good for you. It's easy. But to a lot of people, it's hard. It's hard to get into cryptocurrencies, physically owning them. That's why we have the CFD cryptos. It offers much more flexibility. Okay. All right. So let's talk Forex. This is what we're waiting for. This is what you guys are waiting for. This is the largest and the most liquid market in the world. That's it. End of the story. Okay. To give you a comparison, in 2008, 2009, when I was, you know, fully actively trading and working for all the brokers out there, the estimated daily transaction is, it's only just about 1.9 trillion USD. Okay, 1.9 trillion USD. That's per day. That's the exchange that happens, the buy and sell that happens in one day. 1.9 trillion USD. Multiply that by 30 days or 20 days even. You know, that's a significant amount of money there being transacted, right? Right now, today, in 2021, the estimated transaction per day is about 6 trillion USD. Okay, that's a huge jump in just what, 10 years, 10, 11 years. And you know what? This is actually more than 100 times the largest and the most traded stock market in the world, which is the New York Stock Exchange. So this is trading at 100 times bigger in terms of size, in terms of money being transacted, in terms of the exchange that happens every day. This is a market that is super huge. Okay, this is why it's hard to manipulate this market, because it's so big. There's a lot of things going on. There's a lot of market participants in it. Banks are in it to invest long term. Fund managers are in it to trade. You know, and then we have the retail traders, which is probably most of you guys out there that trades in this market. So if you look at the foreign exchange itself, as a whole, it kind of consists of the physical or digital transactions without leverage. We're talking about the normal currency exchange that happens if you go to the bank. You want to send, let's say you're in India, you want to send money to someone in Malaysia, for example. You go to the bank, you change your rupees into Malaysian ringgits. That's one transaction there for you, okay? But that's without leverage. Obviously, that's people doing business. People are transferring money here and there, okay? And then we have the physical currency exchange. If you're visiting a different country, you need to exchange your currency to that country's currency. That's physical currency exchange. We do have the currency options as well. And then we have the Forex CFDs, which is mainly the largest part of what's going on in the Forex market. Okay? So when we say the Forex market, even though it means foreign exchange in short, right? It basically refers to the CFD based transactions, okay? It will fall under the currency market, but when someone talks to you about money markets, that's a completely different market, okay? So you got to understand that there's two different markets here. We have currency markets, and under currency markets, we have the Forex market. The money markets typically refer to treasury bonds, okay? So OctaFX offers most currency pairs that are commonly traded. I think there's about 28 right now with leverage through CFDs. So you need to understand this. And there's a particular reason why we have 28 at OctaFX, and I'll explain to you what's going on there. It's actually more of a safety pin, I guess. All right, the next market that we're going to talk about is commodity market. Okay, this is a market where raw or primary products are being traded. We have a couple of commodity. We have hard commodity, which is gold, silver, copper, iron ore, rubber, right? The precious metals. And then we have the soft commodity, which is the wheat, coffee, cocoa, cotton. These are the stuff that can go bad, in a sense, right? So soft commodities are usually seasonal and highly affected by what's going on with the weather and stuff like that. This is typically traded in the Chicago Board of Exchange. Hard commodities like metals are affected by manufacturing data. So we are going to look at this on Wednesday. Okay, when we take a look at what's key fundamental that's going to affect the market. In OctaFX, in terms of commodity, OctaFX offers US oil, UK oil. That's the NYMEX, that's your Brent. Okay, the gold, the silver for clients to trade through CFDs. Okay, and then we have what we call the equity index. This is a benchmark index, which is a weighted average of the top stocks listed in it. So when we talk about Dow 30, that's the top 30 stocks in America in terms of market cap. And then it get average, and that's your Dow Jones 30. Okay, Nasdaq 100 again is the top 100 largest market cap in terms of technology companies, and then it get average, it becomes Nasdaq 100. Okay, so I kind of gauge the market performance across the stocks listed in it. If you see the Dow Jones falling constantly, that means all the stocks, most of the stocks are falling. You probably get one or two stocks that are up, but most of them are probably in the red as well. If it all goes green, then most of the stocks are green as well. So we'll talk about that later on in a little bit. Okay, so we know index, but you guys probably don't know this. The index itself cannot be traded physically. You cannot actually go to the stock exchange and say like, hey, I want to trade the index. Okay, you gotta do it through contract for differences, CFDs. So that's what brokers are for. This is what OctaFX is there for. If you want to trade the index, you go through OctaFX. You say, hey, I want to buy and sell the US 30. OctaFX can do that for you. Okay, every country has their own index. Some of you guys are in India right now. I like how it's called over there. It's the Nifty 50s, I think. Really cool name. Yeah, so most countries have their own index. In Singapore, you got the Straits Times Index, I believe. Okay, but most of these are not really openly accessible. It's really hard to get into the index CFDs market, and typically it's just the big ones that we get into. Okay. All right. That's my next point over there. Trading the index is basically generally easier for traders compared to trading individual shares. Let me give you an illustration. If you want to trade the Dow 30, what's inside the Dow 30? Let's take Coke for example, and you want to trade Coke. That means you need to read up on Coca-Cola. You need to read up on their performance. You want to trade McDonald's. You need to look at their performance. You got to review them individually before making a decision whether you want to buy or you want to sell in that particular stock. But if you don't have the time for it or the capability or the team to do that, then trade the index because it's easier. It just takes an average of what's going on in the market and you basically trade that. Easier to read, easier to understand, easier to predict where the market's going to go. We're going to talk about this tomorrow during the technical analysis session. We're going to talk about how we look at this indices and how to trade them. Okay, OctaFX in terms of indices, well, we're going to take a look at the OctaFX website a bit later on, but right now I'm just going to give in a little bit of an info. We have the Dow 30, Nasdaq 100, FTSE, ASX 200, and Nikkei 225. Okay, so why do we keep talking about CFD instruments? Because CFD instruments are instruments that you can actually trade 24 hours. Not like the share market where it's actually open at 9 and then close at 4, and then non-retails get access pre-market and post-market. So that's a bit tough, right? But CFD instruments, that's completely different. You are actually able to look at the market moving even though it's closing. It's close, but people react to it. Okay, so this is good. You know why? Because as a trader, you can choose your own trading hours. You can choose your own style of trading, which is playing a big part into you as a trader going forward. Okay, because I'm a swing trader. If you guys don't know what a swing trading is, it's basically holding a position over a day or two, but typically not over a week, and that's my style of trading. Some people are more of a scalper. They get in, get 1 point, 2 point out. Some people open a position in the market in the morning and then prefer to close it before they end the day. We call them intraday traders. Okay, and then we have the position traders, which is really very, very similar to an investor mindset, which is completely different to what we are going to be talking about in terms of trading. Okay, so trading is not investing, because trading and investors, so trader and investors they both have a separate mindset. Traders only think about the market price movement. If I can make money with market going up, I'll do it. If I can make money when the market goes down, I'll do it. Investors typically are more emotionally attached to their investment. If they like Apple product, for example, they'll buy Apple stocks. They like wearing Nikes. They believe in what Nike is doing. They buy Nike stocks. If you drink Coca-Cola every day, I'm pretty sure you have a Coca. You would love to have a Coke stock in there, right, in your portfolio. So the portfolio choice is going to be different. The mindset is completely going to be different. The goal is going to be different. So right now, ask yourself this question: do you want to be a trader or you want to be an investor? Because those are completely two different mindsets there. Okay. So as I mentioned before, unlike traditional share market, which is really hard to short sell a stock, CFD traders can find opportunity in both rising and falling market with a high liquidity. That means you can get in and out easier and quickly. And then we have leverage, which is allowing you to have less capital requirement, but there's a warning that's going to be attached to this, and that's basically what we're going to be talking about soon. Okay, so let's go deeper. Let's talk about Forex, specifically just Forex. We talk about the global markets, now I want to talk about the Forex market. It's not new, guys, come on. A lot of you are not familiar with it because you guys heard about Forex, and people saying, look, it's a new market, it's a new trend. It's not a new trend. It's not a new financial instrument. It's actually the oldest financial market in the world. Okay, even when there's no money, no currencies being printed, we talk about the fiat currency in one of the webinars in Bahasa, and we're going to be talking about that pretty soon. But we have the fiat currencies, that is the current modern currencies. But before that, it's basically barter and trade, right? You want to do seashells. You probably heard stories about seashells being traded. Sure thing. Okay, that's probably one of the earliest currencies. Pearls, gold, okay, those are the beginning of currencies. Now, when we trade Forex, or the reason why Forex is not commonly known to a lot of people, is that it's reserved for wealthy individuals, large organizations, and banks. And there's a particular reason to that. We're going to take a look into that very, very soon. Internet publicly utilized this in the mid 1990s, and GFT, the company that I work for, is actually one of the first company that started online trading as well. So I've been there at the very beginning of MT4 as well. Okay. It opens up when it first started in the late 90s, early 2000s. It opens up to a lot of people in terms of Forex, on how to trade Forex through CFDs. It basically opens up online trading and leverage trading. It was new back in 2000. It's not new now. It's been 21 years, right? So it's not new. In terms of Forex, the market itself is completely old, super old. It's now accessible to the public and everyone can trade. 10 years ago, I was doing a seminar and I was using an iPhone. If there's a trading app for it, that's super amazing, because back then we don't have it. Right now, you can download the OctaFX Trading App, do it on your phone, set up an account, easy, super easy. It's crazy. It's so simple. All right, it just gets simpler every single day. So you can basically apply for an account immediately right now. If you go to OctaFX website on the description, you can even set it up right now, even without me telling you how to do it. You'll automatically be able how to do it, because you can see that the huge icon on the top right corner of the website saying open an account here. All right, so you can actually get trading within the day as well. All right, let's cover a little bit about market terminology. I call this the jargon buster. You guys can screenshot this if you want, because this is gonna be super useful for you guys going forward, because you need, as a beginner, the bid price and the ask price is gonna be giving you headaches right around all the time. All right, even me right now, I still have to refer to this, because I look at a bid and the ask price is basically the buy price and the sell price, and the difference is basically what we call the spread. But let's talk about the bid price first. This is the price you can sell to dealer, which is your broker. The ask price is the price that the broker sells to you. Okay, so the difference is what we call a spread between a currency or an instrument. That's the difference between the bid and the ask price. The liquidity that I've been talking about is the ability or ease of buying or selling an instrument, and this is a particularly important part in terms of trading, right? If you have a position that's positive, you're profitable, you want to get out of your position, but no one's going to take your offer or your counter offer. No one's actually going to be on the other side taking your sell order. Then you're going to be in trouble, right? If the market reverses and you're not able to get out of your position, that's poor liquidity right there. So don't underestimate liquidity. Liquidity is like super duper important when it comes to trading. And we want to pick a market that has higher liquidity. We're going to talk about some of the currency pairs later on, which one has a higher liquidity, which one has a lower liquidity, which one has the lower spread and stuff. Okay, when we talk about going long, it means buying a currency. I've been talking about short selling, that's selling a currency. So if we say long, we buy, short, we go sell something. All right, pip, this is going to be important for you in terms of currencies. It's basically price in points. It doesn't just refer to currencies, but Forex traders are probably familiar with pips. The problem is a lot of people are actually misunderstanding how to read the pips. The pips is not the 5th decimal point. It's called a fractional pip, that 5th decimal point. The pip itself is the 4th decimal point of a typical USD currencies, or the second in yen crosses. Okay, so we're going to take a look at that very soon. But just to give you an illustration, you probably have done Forex. If you have traveled overseas or you buy something online from other countries, that's you doing Forex. Okay, you basically took part of that $6 trillion a day market and understood the concept of currency trading, because you understand the difference between you understand the valuation of your currency compared to another currency. Okay, so it's basically simple. It's exchanging one currency to another currency. That's the basic form of Forex, and that's it. Okay, so when it comes to what OctaFX is as a broker, as a Forex broker, it's not that different from a currency exchange stall. If you go shopping or you are at the airport, you see a currency exchange stall, or banks when it comes to Forex. Okay, it's basically just the same thing, just using a different instrument. Okay, so let me give you an illustration. By the way, why do I choose Sydney? Because I'm from Sydney in Australia, and let's say I want to go to LA, right? And I live in Sydney. That means I have AUD, Australian dollars, and I want to change it to USD. So I would need to go to a currency exchange stall or a bank, and you guys are probably familiar with that board there. You know, they charge you commission and stuff like that. There's a difference between the buy price, the bid price, and the ask price. The buy price and the sell price, that's the difference there, spread. And then they charge commission on top of that. OctaFX doesn't charge commission on top of the spread, so that's good news for you guys. But if I'm going to travel to America, I need to transfer my I need to exchange my Australian dollars into an American dollar, right? That's what I do. It's just basic. So I have this currency pair right now. Now it's called AUDUSD. My base currency is called the AUD. The base currency is at the front, okay, and the counter currency is the USD. So that means I'm looking at the Australian dollars against the US dollar, okay, and let's say the price is, the bid price is 0.8937. That means I'm selling the Australian dollars to the dealer or to the broker, and they're asking for how much? 0.8939. So the difference is 2 pips. Okay? When you have a base currency and a counter currency, you have what we call a currency pair. We're going to take a look into different currency pairs later on. Some are classified as major currencies, some are classified as minor currencies or cross currencies, and then we have the exotic currencies as well. Okay. So this is the currency pair. If you take a look at this, that's how it's supposed to be quoted. But if you open up a trading chart right now, or a trading platform, if you go to OctaFX, you're not gonna see four digits behind the decimal point. You're gonna be looking at 5. The 5th decimal point is a fractional pip. Okay, so this is how we look at it. The difference between the bid and the ask price is a pip. Okay, so I got 37 and 39, so that's 2 pip for you there. How do I read this? I don't read the bid price. If I want to know what the value of the Australian dollar USD value, I'm not going to looking at the buy price, because I'm going to look at the asking price from the brokers, which is 0.8939, the higher one. Okay, so 1 Australian dollars is then equals to 0.8939. Okay, the difference there between the buy and the sell, that's the spread. And the pip there is a 4th digit behind the decimal point. Okay, let me give you an example. If AUD/USD price is 0.8939 and it goes up 10 pips, it will change the price to 0.8949. Keep this in mind. A movement of 100 pip is 1 cent. Okay. 1 cent to a lot of people are not much, okay, but to us as a trader, that's 100 pips right there, and 1 pip can consist of a huge amount of money. Okay, so 100 pip movement, that's gonna move 89.39 to 90.39. So keep that in mind. 1 cent is a lot. When the market, when you watch the news and they say, oh, the currency is falling by 1 cent or 2 cents. To you, that might not sound much because it's a cent or 2, but it's huge in terms of market movement, market volatility. It's huge. Okay, any market that moves beyond 1 to 2 cents a day, that's completely crazy volatility there. All right. So, put it simply, the concept itself, you cannot get any simpler. Super simple. If you think the Australian dollar is going to get stronger against the US dollar, what are you going to do? You are going to buy the Australian dollars and then you are going to sell against the US dollar, right? So if you think the Australian dollar is going to be weaker than the US dollar, and I live in Australia, for example, and I want to look at my Australian currency and I'll say, you know what? We are going to lose a lot to the American economy. So let's transfer some of my Australian dollars into the US dollar. That's the logic behind it. And that's basically what we are doing as a trader. We want to understand where the market's going to go. Okay. So here's another example over here. This is super. It's just an example. Okay, just for you to wrap your mind around the concept of how to actually be profitable in the currency market. Let's say I have 1,000 Australian dollars, which is super easy, and we use that currency right now, currency rate at 89 cents. That means for every 1,000 AUD, I'll get 890 US dollars, right? So when you're away, the Australian dollar weakens by 1 cent or 100 pips. That means I'm holding the USD right now. The USD has more value when I come back to Australia. Now it's trading at 88, right? So assuming I don't spend the 890 that I exchanged to the US dollar, and I come back during this situation, and I'm going to convert my money back to Australian dollars because I'm back in Australia, then I will get not 1,000 but $1,011.36. So I just traded FX and I made $11.36. Now you put it simply, $11.36. Come on, man, you fork out 1,000, you're getting a return of $11.36. That's pretty much about 1.136%. Now that's basically what you're thinking. It's not a significant gain, right? It's negligible because $1,010 compared to 1,000 is probably nothing. It's not worth the time and investment, and this is the problem here, and this is why it was close up to a lot of people, because back then without leverage, it's hard to get into trading because the money that you invested doesn't make sense. Let's say I invested $1 million. Instead of 1,000, my profit will be 11,363.63. But again, compare 11,363 to $1 million. It's basically comparing that your $11 to 1,000, right? It's the same thing. It's just the number of investment that you put in. If you put in $1 million, then it's gonna be worth your time, right? Because you're earning 11,000. That's a significant earn there. But your capital requirement is $1 million, which is really huge, right? Huge capital, more tangible gain. That's unleveraged. And this is why it was reserved only for the wealthy, the big corporations and the bank, because they have the money. And when they do invest in something, they're not putting a lot of risk there. It's only 1% risk and they're getting a 1% gain or whatever. And it's a good deal for them. Unleveraged, they have the money to back it up. And they have the money to make it worthwhile. Okay, retail traders doesn't carry $1 million around like that for us to trade and get 11,000 in one trade, for example. So investments through banks can be millions, billions, making the gain worthwhile, and this is relatively safe to invest for the capital. I mean, it's about 0.01% gain or loss pretty much. So we're going to talk about leverage next, which is why we're here. Okay, so I got to be really careful when I talk about leverage here, because leverage is it could be good or it could be bad. So listen to this very carefully, okay? If you guys are not focusing right now, focus right now, because this is the key part of the webinar tonight. Leverage, in a nutshell, it amplifies your potential gain and your potential losses as well. So I, as a trader, I always look at two things. I want to know what my potential gains are. I want to know what my potential losses are before I open a trade. Okay, this is the mindset that you need to have if you want to go forward with me in terms of learning the Forex market. Okay, again, I'm not against leverage. By all means, I'm for leverage because it's a very useful tool to help traders lacking the capital to make significant gains in the market. So this allows for everyone to access the currency market, and OctaFX, I believe, offers a leverage of up to 400 or 500. Correct me if I'm wrong there in terms of this OctaFX team. I believe it's 500, right? Correct me if I'm wrong. But anyway, feel free to type in the chat there, help me out there if you can. All right. But we're going to take a look at 400, for example, because I think 400 is it's kind of a reasonable leverage point there. Let's see how it works here, okay? So let's say if I have a leverage of 400 to 1, and I keep looking at a position of, $1 million there. If I want to open a size that's $1 million, and I have a 400 to 1 leverage, that means I only require 2,500 to open $1 million position because I leverage my account 400 times, right? So we call this 2,500 the margin required, and then this is going to be set aside. This is going to be set aside from your capital. Okay, so let's say you want to trade $1 million size position. You need to have 2,500 as your margin requirements, and this is going to be set aside from your capital. Therefore, to open that $1 million position, you will need a starting capital of more than 2,500, like for example, 5,000. Okay. Leverage, if you use it correctly, we will cover this going forward in tomorrow's session and the Wednesday session, but we are going to keep reminding you about leverage, okay? Because if you use it wrongly, then you're going to be in a lot of trouble. But if you do it right, it can help you lower the minimum capital requirement for you to get started. So, as I keep mentioning, the importance of this is because it's a double-edged sword. Don't say I don't warn you, okay? It amplifies your gain, sure. It also amplifies your losses. So, take the previous example that $1 million position, right? Unleveraged, no leverage at all. The return that you get, which is 11,363, is about 1% from your $1 million position. With leverage, the return of 11,363 on a $5,000 account is about 227.26%. That's a lot, you know. You don't just earn 227.26%. But here's the question, but what if you're wrong? Unleveraged, the loss itself will not be 0.01. Sorry, unleveraged, the loss will be only 0.01 of your capital. But with leverage, your losses are going to be more than double your starting capital at 5,000, because your losses is going to be negative 11,363 if you're wrong. Okay, same price movement, you're wrong, you're going to lose 11,000. If you're right, you're going to earn 11,000, which is 227% of your capital. So keep this in mind. We're going to talk about this tomorrow. We are going to cover equity and how to understand equity. We're going to talk about risk management, I believe, on the third session. But we're going to talk about that later on. You're going to come back to this. But right now, you do need to understand the risks in terms of using a leverage. Okay? In Forex, you normally do not lose more than your initial investment, because remember, at the beginning here, we have the margin requirement that we set aside. That means if all else fails, you get a margin call and you get your 2,500 back into your account. Okay. Plus, OctaFX has a negative account balance protection, which we're going to talk about later on. Okay, so don't worry about too much about this. You basically have your protection over there, and OctaFX has a security system that protects it again, which is what we're going to talk about later on. Okay, so here's a quick leverage comparison table. If you have a position size of 10,000, leverage to 100, that means your required margin is 100. Okay, fair enough, simple enough. If you have a 200 to 1 leverage, your required margin is smaller, it's at 50. 300 is 33.33. 400 to 1, your required margin is only $25 to open a 10,000 position. If you want to know what the value of a 10,000 position is, a $10,000 position is what we call mini lot. It means for every pip that moves, you earn $1 itself. Okay, $1,000 size is a micro lot. We're gonna talk about lots and equities and whatever not tomorrow, but this is just to give you an idea. A $10,000 position is $1 a pip. So do the math. If the market moves $50, 50 pips, that means you get $50. If you're wrong, that means you lose $50. Okay, that's on the $10,000 position size. If you are just starting out, you feel free to start out on a micro lot, which is $1,000 position size. Every price movement, every pip is 10 cents. Okay, so do your maths. Depending on your capital, adjust it accordingly. We're going to talk about that at the risk management side on Wednesday. All right, so how do we know when to buy or when to sell? If you understand the financial market, that's going to help out a lot. Okay, but everyone can get started with limited knowledge. Why do I say get started with limited knowledge? Because there are multiple ways to identify opportunity in the market. Okay, we have the technical analysis side, which is super easy for people that don't have financial background. For example, you don't know economics, then you can get started with technical analysis. That means we're just looking at the price movement and rely on past information to identify what's going to happen in the future. And This, I like this because I'm a technical analyst, right? I'm skewing more towards the technical side, but I'm not ignoring the fundamental side, by the way. It allows me for more accurate entries and exits, which is good, right? I mean, I can time in when I get in and when I get out. So this aspect of looking at the market, it requires you to have minimal knowledge of the financial markets. Simple as that. Everyone can start technical analysis. Actually, let me just hide my camera so you can look at the slides there. Okay, so everyone can get started with technical analysis. That's not a problem. It's easier to teach, it's easier to understand, it's easier to pick up. Okay, fundamental analysis are typically left to the realms of the investors, the long-term traders, because you look at the economic data, you need to understand what those economic data are. Some of the key important economic data, we're going to cover that on Wednesday. Okay, and we have the political views of different countries. If a country is at war with another country, what's going to happen to their economy? The currency is going to get affected, those kind of stuff. Okay, it's a reliable view of the bigger picture or the general market direction. We are going to talk about the market, the fundamental and stuff like that as well when we talk about the fundamental analysis. But we're not going to cover that right now because that's too deep for tonight's session, because most of you guys here are beginners and you guys want to understand what's going on here. Okay. All right. So just to give you a quick example from the global financial crisis, this is easy because it's there. The study has been done. Okay. What happened with the US stock market crash is that investors pull out and seek a better performing market. When the global financial crisis happened, by the way, it's okay in Asia because Asia has the Asian financial crisis that doesn't affect the US market back in 97, 98. It's actually safer in Asia during the GFC. It's not super good, but it's a lot better than what's happening in America. Okay. So the process that happens there during the crash is they need to move the money somewhere, right? They have the investment. They don't want to invest in the American stock market. You got they pull out from the stock market. They get US dollar. What do they do with that US dollar? They can buy the Australian dollar, or they can invest it in Japan, for example, and buy the Nikkei, whatever. Okay, but what we do is we speculate that if the US markets continue to drop down or deteriorate, the US dollar is going to be weaker in the long run as money leaves the country, right? And if we look at the stock market in Australia, it's starting to go up because people from the US are starting to invest in Australia. That's going to push the Australian dollar up. So simply, we think the Australian dollar is going to go up. We think the US dollar is going to go down. We buy the Australian dollar against the USD. Simple as that. Okay. So another reason on why share traders are actually moving towards the CFD markets is due to the simplicity of things. Okay, I mean, if I take a look at the share markets, there are thousands of shares to choose from. It's crazy. I mean, you got your penny stocks, you got your blue chips. There's a lot of stocks. Some of you don't even know what the companies are. All right, I mean, you don't even know what you're investing in. Plus, it's so hard to do research on each individual companies. I mean, if you're going to be looking at 100 companies that you have to research, think about how you have to calculate the valuation of these 100 companies. I can just look at one index and I'll just start calculating on what those indexes are worth. If I want to look at currencies, I'll look at the major currencies. There's probably only about 8 currencies there as a major currency. It's not complex. It's not crazy choices out there. So when we talk about the CFD markets, there are going to be instruments that dominate, meaning they are actively traded daily across the globe. Let me give you an example: the Euro USD and the Pound USD, the Sterling USD, the Dollar Yen. Those three are traded a lot. Okay, people do business with the US market, or people do business in US dollar, so the US dollar is going to get traded a lot. In fact, that's the international currency reserve. Euro is the second one. So we look at those two currencies, for example. We got the Euro USD because we look at the Euro market. We take a look at the USD market. Excuse me. They dominate. they're comparing to the volume of all the other currencies, the euro currencies and the euro and the US dollar itself. Both of them are actually dominating other currencies. So you can just focus on the euro USD if you want high liquidity, better spreads, small spreads. You can look at the euro USD because a lot of people trade them. Global indices being an average of shares, this allows you to focus on these indices instead of the individual shares. Like I keep giving you an example of, Coca-Cola, McDonald's. You can just look at Dow 30, focus on it, figure out where the market's gonna go. I'll just trade the index. It's the same thing, right? So we talk about currencies that dominate. So this is the major pairs in Forex market. Okay, we have the euro USD, the euro versus the US dollar, which is what we call the euro. When we say the euro, it's the euro USD. And then we have the Great British Pound versus the US dollar, or GBP USD, or the cable sterling, depending on which region you are, depending on which area you're from. The older generations call it the cable because of the cross Atlantic cables between America and the UK. That's where the name cable from. And then we have the Australian dollar versus the US dollar, which is the AUDUSD, which is the example we have been doing tonight. The Aussie, okay. We have the dollar yen, the USD versus Japanese yen. And then we have the Swissy, the US dollar versus the Swiss franc, the US dollar versus Canadian dollar, or the loonie. If any Canadians out here, can you guys help out in the chat there? Why is it called a loonie? Okay. Because that's a funny story behind that. But it's called a loonie, and loonie as not in a loony bin crazy type, but it's loonie as in a bird called loonie. Okay. Like in New Zealand dollar against the US dollar, we call it the Kiwi because that's pretty much the symbol of New Zealand. We refer to people from New Zealand as the Kiwis. Any Kiwis here? You guys probably know that. Okay, so those are the major currency pairs. I mean, if you count how many of them are there. There's only, like I told you just now, it was probably about 8, and this is only 7 listed here. If you focus on 4 of this, that's more than enough for you. In fact, you know what? I focus more on the GBP USD itself. That's my specialty. I'll look at GBP USD. So let's talk about the other currencies. We have the major, we got the minor, we got the exotic currencies. What are those? Minor currencies are usually currency crosses. These are currency pairs that excludes USD. If you look at the major currencies, you know that they are USD based. Okay, example of these currency crosses are the euro pound, the euro yen, sterling yen, the Aussie yen, euro Aussie, Swiss Japanese yen. Exotic currencies are currencies that are usually associated with developing countries, such as USD versus Indonesian rupiah, Indian rupee, Turkish lira, Thai baht, Malaysian ringgit, Filipino pesos, Brazilian real, just to name a few. These are exotic currencies and they are harder to predict. Okay, the major currencies are more commonly traded, leading to a high liquidity. So you got to look at the major first. If you're starting out, I don't want you to look at the minor currencies. I don't want you to look at the exotic currencies. I want you to focus on the major currencies. Pick 2, 3, 4 to focus on and learn their behavior patterns. That's how you're going to be successful in trading. You don't just randomly trade anything. You got to look at understanding what that currency is, what the behavior is, what their volatility is. Okay. Major currencies are commonly traded. That means they have a higher liquidity because a lot of people are trading in it. They can buy and some people want to sell. So crisscross, you got to match. Non-exaggerated volatility, that means you can predict the price movement. It's not going to suddenly just jump up 100, 200 points. It's gradual increase in terms of price movement. It's not going to shock you like crazy, although it's going to happen once every month, typically during the first week of the first Friday of every month, which is the release of the non-farm payroll in the US. That's pretty much one of the highest volatility days in the month. And because they're mostly traded, commonly traded, they have a lower spread because they have a high liquidity. Okay, so keep this in mind here, the link between liquidity and the spread. The higher the liquidity of a currency or an instrument, the lower the spread is going to be. Okay. Cross currencies are usually not US dollar based, and they have a different pip valuation than normal USD denomination. For example, the euro pound. You know, you look at a euro pound, just now we talk about $10 equating to about $1 USD per pip movement. In euro pound, that's probably about 2 to 3 pips per $2 to $3 per pip movement. It's slightly different. The calculation is different. The margin requirement is completely different from comparing it to the USD. So you have to be careful when you do cross currencies or minor currency trading here, because you might miscalculate your equity balances, your capital risks, and stuff like that. Okay, they're not commonly traded like the majors. They have a slightly higher spread, and some lacking the volatility, like the euro pound. For example, if you open up a chart and you look at euro pound, it's not crazy volatile. When we talk about volatility, it means how much of a movement in one day that could happen. Sterling yen, for example, which is also a cross currency and a minor currency, it has a way higher volatility than what the euro pound is. Okay, so you got to look at it from these two perspectives in terms of volatility and spread. Okay, let's talk about exotic currencies, because I cannot say this enough. I've been doing webinars in Bahasa Indonesia for the Indonesian market, and you know what I find really strange? A lot of these traders over there, they like to trade exotic currencies. In fact, a lot of beginners like to trade exotic currencies. I do not recommend people trade exotic currencies, and this is why OctaFX was only offering about 28 currency pair, if I'm not wrong. Fix me if I'm wrong there, but the 28, it kind of excludes the exotics here, which is like the one that nobody trades. Okay, it's lacking liquidity. It has a higher spread. Movement on these pairs are super exaggerated. Some of them doesn't move in a day, then the next day it moves to 100 point without nothing, and then it stops, doesn't move anymore until the day after. And you got to consider the currencies that are pegged, like the Singapore dollars are pegged. Okay, the Hong Kong dollars are pegged. Chinese yuan are controlled float. The Indonesian rupiah, they never say it's a controlled float, but it is more of a controlled float by the government. So these pairs are usually harder to analyze, basically from a fundamental perspective or technical perspective, because it gives you a lot of gaps in the market and exaggerated price movement. It basically carries a higher risk than major currency crosses. So if you start out and you want to get into Forex, okay, stay away from the exotic currencies, focus on the major and the minor, pick 3 or 4 to start with, and that's it. Okay, and Bob's your uncle. Okay, so what's next? This is what we're going to be looking at in the second workshop session. Is a brief look into technical analysis and understanding trading. Okay, so we're going to look at a platform. We're going to look at what technical analysis is. And then on the third workshop, which is on Wednesday, we're going to take a look at fundamental analysis. I want to share with you some basic risk management so you can get started on the third day, pretty much ready to go with some understanding of technical. I know how to open a trade, close the trade. Tomorrow. We're going to take a look at the platform. Get yourself prepared with MT4. That's what you need. Okay, that's why in order to follow along for tomorrow's session and Wednesday's session, you will need to set up a trading account. If you are confident or you're ready to go, you can set up a real account if you want to. But for most, maybe you want to set up a practice account or a demo account first. That's completely fine as well. So I'm gonna stop here. I'm gonna switch to the broker's website to tell you what's on offer. Okay, the link is on the description. I believe every region have their own specific link as well, but I believe it's my.octafx.com/sign up if you want to sign up, or you can go to octafx.com and then you can choose your language over here, switch it to whatever language you want. You can have it in Bahasa, in Chinese, Malayu, Portuguese, Espanol, in Thai, in Deutsch, okay, in I believe it's Arabic, Urdu, Hindi, and Vietnamese. Okay, I hope I don't I hope I got that right. Anyway, when you get in here, you got your choices of platforms. You got your MetaTrader 5, okay, and MetaTrader 4. I would prefer MetaTrader 4 because of the bugs in MetaTrader 5. I would prefer MetaTrader 4. If you want something new, then you have your C Trader there, which is much more liquid. It offers some different charting methodology than MetaTrader 4. MetaTrader 4 is more common to a lot of people because you got your custom indicators and whatnot. Your expert advisors to automatically trade for you. Okay. You also have your OctaFX Trading App. You can get it on Google Play. There's a link there. It has language support in Bengali, Chinese, English, Hindi, Indonesian, Malaysian, Malay, Portuguese, Spanish, and Thai. Okay. So it is accessible to everyone. If you don't see that green button up on the right there, it says open account. You can start trading there, or you can do a practice account there. And you got a 50% bonus on deposit. I believe there's a promotion running right now. Maybe I think it's 100% if I'm not wrong. Is that right? Anyway, we have a negative balance protection, which we're going to talk about next. Okay. And this is it. Okay. In terms of security, your accounts are segregated from the main account. So everyone has their own segregated accounts. SSL protected, account verification, your ID is verified and stuff like that. Secure withdrawal rules. Just keep in mind that any transaction you want to do, you want to deposit or you want to withdraw your money, you have to do it from OctaFX website. Do not go around believing people saying that, hey, deposit money through me and whatnot, because we have heard stories of scams going through like that. People are not withdrawing or depositing through OctaFX. If you want to do it safely and securely, do it through OctaFX itself. Okay, you can do credit card transaction if you want to. You got your, I believe, the negative balance protection. Okay, so your account cannot go to negative. If you accidentally open an account and it's triggered and you don't have the required balance on your account to open a position, it should get refunded to your account and you're not going to fall below zero balance. Okay. All right. Currency trading, we covered that. I want to take a look at the assets here. 1 to 500 maximum leverage. 28 of the most volatile pairs, which is the major and the minor currencies crosses. That's there. You got your index CFDs, up to 10 popular indices. 1 to 50 maximum leverage on those indices. Okay. Commodities have a different leverage as well. Trade gold and silver is 1 to 200. Brent and WTI, it's 1 to 50. Okay. You got your cryptocurrencies, 1 to 10 maximum leverage. So all these multi-assets, they have different leverages. So you need to understand. That's why we're talking about global market, not just the currency market just now. Okay. So you can trade crypto. You know, it offers Bitcoin, Ethereum, Litecoin, Ripple, Bitcoin Cash. It's all there. CFDs. You got your commodities and whatnot. Okay. You got your ASX, Nikkei. This is some of the quotes example. This is the spread in real time right now. Euro USD is at 1, pound USD is at 2, dollar yen is at 1.4. Okay, so these are some of the currency crosses that you can see. It's all on the OctaFX website there if you want to take a look. Okay, so a lot of choices over there. All right, so how do we open an account? Let's do a walkthrough on this. Click on open account, type in your first name, your last name, your email, your password, and then just click on open an account. Or you can sign up with Facebook or Google to do so. It's all super easy to do so. You can do it through the apps as well, I believe. Okay, so again, it just comes down to a matter of what you want to be trading with. MT4, MT5, C Trader. Some of the other advantage of MT4, I believe, it's copy trading. Okay, so you got copy trading. It means you're following other traders. You can take a look at copy trading, for example, here. Let me just click on. Sorry, there we go. Come on, it's not loading. There we go. If you're good, if you're a trader, you want to be a copy trader, you can join as a copy trader. You can, you get people to follow your trades if you want. You get to choose. You need to join, but you get to choose how you wanna trade, or you wanna follow people that are trading automatically for you. If they open a position, it automatically gets open in your account as well. It's got a separate copy trading app as well, so that's different. Okay, let's take a look at the master traders rating, so you can filter out who are the top gainers. Okay, you can take a look here. You can filter out who are the top gainers for the last 3 months, for example. I can say at all time. I can click on that. Okay, I can say for the last 2 weeks who's good. There we go. You can go for the most popular one in the past 2 weeks. Extra income seems to be there for the past few months. Okay, all time extra income has gained 7,442%. That's a significant amount of gain there over time. The commission, though, it's at 30%. So you got to look at the commission cost that those traders charge you. This guy here, Bear versus Bull from Malaysia, is charging 13%, performing at 151%. Guru 4868 charging 35%. Okay, so you got to look at that. All of these traders charge different commission. You got your, charging per lot size, $15 per lot, 30% of the profit, whatnot, 50% of the profit. So take a look at copy trading if you want to join in. But if you want to do your own analysis, then you have your trading calculator here. You got your profit calculator, you got your live codes, you got your monitoring, you got your auto charts. Okay, you got your Forex basics, you got your education site here, you got video tutorials, webinars. For example, if you click on webinars, okay, you got the upcoming webinars in several languages. I'm doing English and Bahasa Indonesia, because if you guys are figuring out where I'm from, I'm born in Indonesia. I grew up in Singapore. I moved to Australia when I was a teenager. Spend most of my time in Australia. Also, I'm technically Australian, so there we go. But I can still speak Bahasa, and I still do webinars in Bahasa. So it's our upcoming webinars. You got me, you got Kayo Ang doing live trading sessions soon. Okay, so you can find your speakers in other languages as well. I believe there's one in Hindi, Urdu, Malay as well. But there we go. Okay, so that's a little rundown on how to open an account. So get started there if you want. And we're gonna go to Q&A session, which is right about time. All right, let me go through the questions here. That's a lot of questions. How much my account is safe in terms of hacking? I don't know about that. In terms of hacking, it should be pretty safe. I mean, with the security that OctaFX has, should be okay. Why is closed BTC, USD Saturday, Sunday, BTC price 24 hours running, but OctaFX on MT4 running on BTC? Okay, BTC is dependent on the exchange itself. Some exchanges are trading it on over the weekend. That's why you see price movement over the weekend as well. I do that physically, straight on the exchange, and I can trade that on the exchange. But the Bitcoin that's being traded here, it's based on CFD, so it has a different trading hours. So that's different. Which broker you can recommend? You're attending an OctaFX webinar, so I think OctaFX would be the answer for that. Okay. Are these currencies or stocks? It's currencies, stocks, indices. Yeah, someone answers currency. Thank you. Why is VERF means of payment not accepted? OctaFX team probably got the answer to that. I like OctaFX. They're doing pretty good. Thank you. Really enjoy my life with OctaFX. Thank you. Okay, withdrawal issues. Pretty sure that can be solved. What is CFD? CFD is contract for differences. That means you are trading a contract, not something physically, but a contract itself. During trading, should we analyze the international market or the current country market? The answer to that is both, but putting a focus on the current country. Okay, this is a weird question. Are you asking if you live in Pakistan or India and then you are looking at the Pakistani market or Indian market, but you want to be trading the US market? If you are trading the US market, then you should analyze the US market. If you're trading the pound during the London Open, then you should be focused more on the UK market and what's going on with the US market. In Pakistan, how can we trade? I mean, by which method we withdraw money? OctaFX can answer that. Please arrange a program in Urdu. I think that's already on the plan for OctaFX because I think I saw the some of the other webinars as well. Tell us about slow and safe strategies. We are going to talk about how to look at the technical side of things tomorrow, and then fundamental on Wednesday, as well as risk management. I think that should be enough to get started. But to tell you the slow and safe strategies, I think that will be in an upcoming webinar. Okay. Ta-da-da-da. Sorry guys, I'm just going through the question. There's a lot of question here. Leverage affect the profit of the customer. It increases or decreases the profit? No. It increases your profit or your losses. So it doesn't decrease the profit, it increases your profit or your losses if you get it wrong. Okay. Is OctaFX registered with SEBI? OctaFX team can answer that for me. What's the amount to trade if you don't want to use leverage? That's gonna be tough. I just gave you an example of $1 million earning $11,000. If you have $1,000, 1% gain is at what? 100 pip movement is 1% gain, which is $11. If you want to trade unleveraged, feel free to just get a physical currency, I believe. Okay, I'm not familiar with Skrill or NetTeller. Maybe. Okay, why sometimes spreads are insane highly, especially end of US session? Because there's a lack of liquidity. If you want to see crazy spreads, then you should take a look at the non-farm payroll. During non-farm payroll, typically spreads are crazy. You want to work for OctaFX, you should contact OctaFX, not me. I don't. Okay, these are more on account questions. A lot of you guys want to work for OctaFX. Okay. Which one is better, copy trading or other method? Depends. Some would do copy trading. Some would do expert advices to automatically trade a position if something is triggered or condition is triggered. All right, Walid Khalid, can you explain sell button in app? We buy basic currency and close. What sell button do? Can you elaborate? We're gonna take a look at that tomorrow when we go through the currency platform. Sorry, the trading platform. Today is basically just a quick understanding of what the market is. Counter currency is also quote as a quote currency. A quote currency is a base currency. What is 25% spread? Okay, I don't think we have a 25% spread. Okay. Dogecoin to the moon. I like that. Yeah. We're gonna take a look at how we open and close a trade tomorrow through MT4. So if you guys want to get set up and set up for a practice account, to download MT4 so you can log in and you can follow through what we're gonna be doing tomorrow. That'll be great because I need to show you how to open and close a trade, how to set your stop loss, how to set a take profit. We're gonna take a look at some basic technical analysis, charting, basic charting. We're gonna do that tomorrow. So I need you to have a working platform. It's either MT5, MT4, or CTrader. Just get started, set up a practice account so we can do that tomorrow together. Okay. How do I start trading in OctaFX? I just show you how to do that. You go to OctaFX.com or you go to the link down there, my.octafx.com/sign up. Go and sign up. For beginners, OctaFX team here has given a answer there. I didn't miss your question. I was just doing my presentation and I'm going to repeat it back to you. I've read it twice. Kindly explain sell button in the app. In buy, we buy basic currency and close. What sell button do? Kindly elaborate. We are going to take a look at that tomorrow during the platform rundown. Okay, leverage is 500. I believe that's the max one. When is the webinar for Indonesia? I believe that's going to be in a week's time or 2 weeks time on a different topic. That's on an advanced topic. It's not on a beginner topic. Okay, if you want to go on a beginner one for Bahasa, I think it's recorded. You can go to OctaFX broker channel and then find those videos. Okay. Okay. Can we get a video tutorial on how to trade? We are actually going to do that for our second part tomorrow. Can I get a video tutorial? Don't worry, this is recorded so you guys can rewatch this again. Yes, you joined late. Can I get a tutorial video? This is gonna get recorded. It is recorded, so you can view it again. So those that just joined, that's fine. That's completely fine. You can just review it again. This is just going through the Q&A session, which is probably not important, but the content is important, so you can review the content again. If you missed out or if I'm going too fast, do let me know so I can go slower tomorrow and the day after. It's just that I'm worried because we have a lot of content to cover today. Okay. Promo code. Pop. All right, I'm a good teacher. Thank you very much. I appreciate that. Is it possible to use MetaTrader 4 and MetaTrader 5 if you open 2 accounts? I believe you can have one account in MT4 and one account in MT5. I don't think that is a problem for those. Promo code. Hold on. Wow, that's a lot of Q&A here. Okay, promo code. I'm not sure. OctaFX team, can you help out with that? All right, legality has been answered. Leverage has been explained again. Why is people asking about promo code here? Any precaution for overtrading? Don't overtrade. Simple as that. Do a little trade is if you want. It depends on your trading style. So it's completely different. That's a very open question there, Ankit Sangha. Any precaution for overtrading? I don't think you should overtrade. How do I tell you not to overtrade? That would have to come from you. That's a psychological aspect of you as a trader. I think you should only trade a position that you know the risk that you're going to take and the profit that you are aiming for. The technical analysis, Forex and normal market. Okay, this is I'm not pretty clear on the question. Could you please type on that? You don't understand when the spread works. Okay, spread is the difference between the bid price and the ask price. The difference between those two price is your spread. You want to get more understanding on the copy trading aspect? We're going to cover that tomorrow as well when we go through a platform rundown. I'll open up the copy trading aspect. Okay. We're gonna analyze candlestick tomorrow. When is the next webinar? The next webinar is tomorrow at the same time. Right. Yeah. Completely forgot. There is a competition here, by the way. Can win a car. And then there's a competition that's open for a demo account as well as real account as well. So even in demo accounts, you can actually get prizes. I believe that's a competition going on. So this is I believe this is for the car as world contest, and I believe this is for real account. So if you open an account and deposit some money, you can see that there are some winners there from Malaysia, India, and Indonesia as well. Okay, so this is for real account competition. I believe this is for the demo one. Okay. Next round starting at 10th of May 2021. So what day is it now? It's 12th. It's starting in about a month's time. So register for that and just join for the next round if you want. So thank you for that, Shikar. Appreciate that. Nearly forgot about this, that there's competition running all the time for real account as well as demo accounts. Feel free to trade in OctaFX or MT4 app. I think both options works fine. Best leverage ratio for beginners: 200 to 1, 400 to 1, depending on your capital size. If you have a huge capital, I would have a lower leverage requirement. I think that's preferable. You don't need to have any qualifications to trade. I believe you can just trade. That's completely fine. Leverage for a price as low as 100. I'm not sure what the question is. How to calculate the spread? The price, the price between the bid and the ask. That's the spread, as in the slide. If you missed that part, feel free to review it again. Okay. Someone that wants to join my group, my Telegram group in Bahasa. It's been a month. Contact customer service for OctaFX. Do bond yields affect currency valuation? Yes, it does, and we're gonna cover that on Wednesday. I don't know what the promo code is. It's Forex Trading by minutes, hours, days, or months. What's your recommendation for beginners or newbie with regards to the duration of trading? I believe you're talking about time frames here. I would say if you are a beginner, I will stick with the hourly time frame or the daily time frame. I think that's okay. Thank you too, Michelle. Okay, technical analysis of forex and major commodities for major exchanges available. Well, you have to do it yourself. No one's going to provide that for you, but we are going to provide that with education to help you be able to analyze yourself. What's the best trading hours of time with different volume and market movement? The UK market open, it's one of the best time depending on the currency that you trade. If I trade a pound, then the UK open is my favorite time because it creates a lot of volatility for me to take advantage, and that's my best time to trade. Depending on your currencies, if you trade the Australian dollar, for example, you really want to trade during the Australian time and late in the US session. Okay. All right. I think that kind of on time doing the Q&A session and everything else. What's the difference between spread and margin? Okay, this difference is spread. It's the difference between, for example, you got your, let me just pull out my just hold on 1 second. Okay, there we go. Okay, The difference between the bid and the ask price calculated in pips is the spread. Okay. When we talk about margin, that's how big of a position that you open. Feel free to review the video again, but in this video example, let's say you have a $5,000 account, you want to open $1 million position, you got leverage of 400 to 1, then your required margin is 2,500. That's just an example, but we'll talk more about understanding your equity tomorrow in the trading platform, so we're gonna cover that again, so not a problem. Which time frame is better for high volatility market? Look, it's a choice. I cannot decide for you. I don't know what kind of trader you are. If you are intraday trader or a scalper, then I believe you want to be trading in 5 minutes, 15 minutes. But I don't recommend that for beginner traders. I would recommend an hourly chart to look at or the daily chart to look at and trade in those time periods. Do we still have to download that MetaTrader 4? That would depend. I believe you can trade off MT4. The OctaFX app, I believe, is just a separate app that accesses the MT4 with a different user interface, which is probably prettier because MT4 is ugly. If you lost your money in trading, then you cannot get your money back. That's obvious, right? Okay, cool. If you are afraid of going into a real account, you can always try out the practice account first. Get familiar if you want to know whether this is for you, because the questions here are very concerning to me. This is not a guaranteed thing. There's nothing that's gonna guarantee you 100% return. Okay, so you want to try it out. Maybe this is not for you. Maybe it is for you. It depends. It's your choice. But do try it out if you want with a practice account. That way, if you don't actually put in your own money, it's a demo account. All right. It'll just give you some virtual currency for you to trade and see if this is for you, because this is not for everyone. So you got to keep that in mind. The webinar is for everyone. The video is here for everyone. The education that I provide is for everyone, but trading is not for everyone. So consider that in your own circumstance. Is this something that you can do? My point is, if you have a spare money that you are okay to lose, then that's fine. That's excess money that you can try turning into profits. The way I look at it is this: trading is just like a business. If you want to run a business, you don't know whether you're going to be profitable or not, right? You don't know whether your business is going to hit the go button and run. Okay, I'm not going to tell you right now. If you attend the webinar here, which is super basic, tomorrow you're able to trade and earn $1,000, $10,000 in one day. It took me how many years to figure out the market? Okay, it takes people experience to be able to trade well. So you're not going to be able to trade well just by attending a lot of webinars and, oh yeah, this guy's right, this guy's wrong. No, it doesn't work that way. You need experience, you need to practice, and you need to have a good, strong trading psychology. Your mentality needs to be really strong. Your money management needs to be really good. So there's a lot of factors here, not just looking at technical or fundamental, but you got to look at the risk management aspect. You got to look at the psychological aspect of trading as well. There's no guarantee. Okay, an investment is not a guarantee. But I can tell you one thing: you hold on to cash, then I can guarantee you that inflation is gonna kill the value of your cash. Simple as that. That's a fact. Okay. All right. Okay. I think the questions are starting to get out of hand. It's starting to get weird here with people asking for a guaranteed return. There's no guaranteed return. Again, Forex is not for everyone. Think about it for yourself. Try it out with a practice account or a demo account. For those that are okay to continue, I'm going to see you tomorrow for the second workshop. We're going to talk about technical analysis. We're going to run through the trading platform. We'll be running through MT4 tomorrow. So if you guys want to download MT4 in preparation for tomorrow, please do so. and we'll go through that. And if you are watching this video on a later time, download MT4 or set up an account or practice account so you can follow through the next session on the workshop tomorrow. Okay. How does the higher spread and vice versa affect a trader? That would be depending on the trader itself. All right, guys, we'll wrap it up for tonight. Thank you for your time. We'll continue on tomorrow with the platform rundown as well as some of the basic technical analysis, including how to read a candlestick, how to draw trend line and whatnot. So we're gonna get started tomorrow. Get ready, prepare your MT4. We'll jump straight in tomorrow. In the meantime, thank you for attending tonight's session. Really appreciate your time, really appreciate the enthusiasm, and I'll see you tomorrow. Have a good night, good morning, good evening, good day. See you soon.